The question of whether Bitcoin can reclaim $90,000 is on every investor's mind, but it might not be the right question to ask. Welcome to the Generational Wealth Community, your pathway from knowledge to legacy. After a brutal sell-off that pushed Bitcoin to a 9-month low, briefly dipping below $79,000, the market is caught between fear and opportunity. While some see this as the beginning of a prolonged bear market, others are quietly accumulating. The reality is, one critical factor will likely determine Bitcoin's next major move. Today, we cut through the noise to give you the final answer. Bitcoin is currently in a fierce battle, consolidating after a sharp rejection from its recent highs. This has transformed the entire range from the low 80,000s up to $90,000 into a massive psychological and structural battlefield. To understand where the price is headed, we need to look at the data. We'll examine the powerful bullish case for a strong recovery, and then we will dissect the bearish arguments that suggest more pain could be on the way. Despite the recent fear, there are strong bullish undercurrents. First, from a technical perspective, some analysts point to an ascending broadening wedge pattern, with the price recently bouncing from the lower boundary of this formation. And historically, February is a strong month for Bitcoin. With average returns around 14.3%, a similar performance this month could push the price right back toward the $90,000 to $101,000 range. However, the more significant story is institutional demand. While spot Bitcoin ETFs experienced major outflows in late 2025 and parts of January 2026, those trends may be shifting. After a volatile month that saw net outflows estimated at over $1 billion, any sustained return to positive inflows would provide tremendous structural support for the market. Long-term fundamentals also support a broader recovery. Major institutions remain incredibly bullish for 2026, with some price targets sitting at $150,000, $180,000, or even $250,000. These forecasts are based on the post-halving supply shock and the massive institutional adoption that is still considered to be in its early stages. From a purely technical standpoint, if Bitcoin can reclaim its major moving averages, a move toward the $100,000 zone is still firmly on the table. Now let's look at the other side, because the bearish factors are significant. The biggest immediate hurdle is the massive wall of resistance Bitcoin faces. Having been rejected from levels around $90,000, each failure to break higher reinforces the idea that sellers are currently in control. While deep fear can be a bullish contrarian sign, some on-chain data is concerning. A pattern has emerged where smaller retail wallets are buying this dip, while some smart money whale wallets have been selling, a trend that often precedes further corrections. On the other hand, separate data focusing on the largest whales suggests they are the primary cohort buying as prices fall, while all smaller groups are selling. Macro risk is another major headwind. The market is consolidating, and without a strong positive catalyst, it remains vulnerable. A breakdown below the key support zone of $75,000 to $76,000 could open the door for a much deeper drop. Some analysts warn that a failure to hold these levels could see the price fall toward $70,000 or even lower. The recent plunge to a 9-month low of around $81,000 shows the crypto sector is on shaky ground. So, can Bitcoin reach $90,000 again? The final answer is yes, it can, but it has a serious fight on its hands. The battle to reclaim the low to mid $80,000 range is the single most important factor for Bitcoin's direction right now. Simply reaching $90,000 isn't the victory. The real question is whether it can break through the heavy resistance that begins around $89,000 to $90,000 with high volume. Here's the final verdict: the bullish case. Driven by strong historical seasonality for February and the potential for slowing ETF outflows, suggests we will see another attempt at recovery. But the bearish case is just as compelling. The overhead resistance is proven, on-chain metrics are mixed, and the market needs a real catalyst to push higher. The decisive factor will be those institutional flows. Watch the spot ETF data closely. If we see a clear shift back to net inflows and a high-volume push above the key resistance area, the path to $90,000 and beyond opens up. If the flows stay weak and the price gets rejected again, expect a retest of the recent lows. With a real risk of going lower towards $76,000 or less, the fight for the low 80,000s is on, and the winner will determine the next major trend for the entire crypto market. Stay sharp. Subscribe for daily recaps. Drop a comment on your biggest takeaway and turn on notifications. We do a crypto news video every morning and a deep dive every afternoon. Let us know in the comments any subjects you'd like us to cover. Quick disclaimer: I'm not a licensed financial advisor. This is for educational purposes only and not financial or investment advice. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.